Namaskar. Hello and welcome to PGurus channel, Daily Global Insights with Sridhar Chityala ji. We had our last insight on Wednesday. We're back on Sunday. A lot of important information that to be shared with you. Please like this video, and if you have not already subscribed to your video, please do subscribe to our channel. Let's welcome Sridhar Chityala ji. Sridhar ji, namaskar and welcome to PGurus channel. How are you, sir?
Namaskar, Ji. Namaskar. First and foremost, welcome back, Ji. We missed you very badly. Welcome back, and wishing you a very happy Diwali and Deepavali to you and your family, and most important, good health and faster recovery to you, Sriji.
Thank you so much, sir, and all our viewers, happy Dhanteras, and wish you all a very happy Deepavali. Stay safe out there whenever you're bursting crackers. Make sure your new clothes don't get caught and tangled or anything like that. And now let's jump right into our daily global insights. Sridharji, you have a lot of comparative information today. Also, viewers, what the United States doing? There is a method to this madness, and that's what Sridharji is going to be sharing today. We are also going to be looking at India's numbers. India is zooming, US is holding, meaning like the tariffs has not really put a huge dent in the United States budget. That's what we are going to see by looking at the numbers itself. Sridharji, I yield the floor to you, sir. And again, one more request to all of you people: please like this video. Over to you, sir.
Thank you, Sriji. Okay, so I think we're trying to answer the questions, which is namely, let's look at comparatively India and United States. We'll probably even do China later, but let's compare India and United States and see, what their economic trajectory is and how the tariffs and other things are having an immediate impact and then the long-term impact. The other question that we'll try to answer is why India is on a roll, why everybody, you read the papers, you read the media, everywhere it is about, India, and, everybody follows India in terms of its growth trajectory and the opportunity, notwithstanding some of the challenges India has faced on headline tariffs, etc. Headline tariffs, and notably, from its most important trading partner, United States. Is US in a deep hole? Yes, US is in a deep hole, but US is not going to sink. There are people working behind the scenes as to how to pull it out of that. And so, we'll cover that part of it with data. And are we seeing some signs of early headwinds? I think we are, as a result of some of the systemic issues that we see. And will we prevail? I believe there may be a temporary hiccup, but it'll move forward. Tariffs, is it hurting or helping? According to many people, including IMF, really the tariffs have not hurt United States or global economy. There is no downward, what you call, scaling of the economy. There may be some minor aberration, but it's not going to be material. Now, where is the India-US dialogue and US-China? So are we beginning to see, some kind of early signs of an opportunity to close? Again, everybody says, we're going to do the deal, but every time you try and do a deal, Trump props up and says, hey, India has agreed to reduce oil from Russia and then probably buy from us. And then India says, we never spoke with President Trump about it. I don't know who spoke, who didn't speak, but the story is that there seems to be some movement towards India buying more oil from US. So this is what we'll cover. But first and foremost, we'll try to give you the key economic KPIs as of October 2025. When nominal GDP, everybody knows, is at 4.2 trillion, and PPP is at 17.7 trillion for India, and then 30.62 trillion for United States. And there's no difference on the PPP side. Now, this is where the
reference. It is the reference against which others are measured, sir.
Correct. And then the GDP growth, as you all know, is continuing to be not 8% plus, but is in the 6.5 to 6.7%, because I've seen some forecasts at 6.8% for India. So when you look at 24, which it finished 25, it finished 26, The predictions are 6.5, and we have even IMF predicting 6.3% for FY27, which all means that India is, swaggering its way towards its 5 trillion goal on the nominal GDP side. As far as the US is concerned, US is, a large base. Surprising, 24 was 2.8%, despite the headwinds by tariff and other kinds of high interest rates. There's still FY25 is likely to be annualized 2%, though we saw last quarter 3.8% in United States, but it's not going, it's one quarter. But when you annualize it across the 4 quarters, then this is the number. 26 also 2.1. Now, this is the crux of the difference between the two economies, and that's why United States is hurting from an immediate and to long term, unless if they don't change course. The GDP-based sector, agriculture contributes 18% in India, 28%, 27.6 from the industrial or manufacturing side, and services is 54.7. You flip to the other side, almost agro, which used to be one of the fundamental, economic drivers of United States, has reduced to 1%. The whole Fed banking system that was created is based on agro imports and exports. And to see the neglect is very, very sad state of affairs. And this is why they're trying to push everybody else to buy US agro products and see what they can do to that to tilt. Then on the manufacturing side, this is the battle of Trump. This is the battle lost by all prior presidents when they gave it away to China. And today, from the manufacturing or from the industry side, the contribution notwithstanding, we're talking about a large base, is only 19%. And services is 80%. Low margins, 80%. This is the battle. This is the reason why we have a huge imbalance. And, India has tilted the tables, namely that it may have gone in that direction, but several of the Modi government programs, the PLI, the reforms, and various indigenization, both on the high-end defense sectors as well as the lower-end retail consumer sectors, manufacturing is moving to India. India should try to have at least 30 to 32% or 35% if possible of its GDP in the industrial segment. India has done phenomenal job on the inflation. Inflation has now dipped from almost 4% to 1.5% as of September. I don't know whether it's going to go up as a result of some of the trends we are seeing elsewhere in the world. United States is around 3%, still manageable. Unemployment, India is around 5%, and United States has had a healthy kind of unemployment. This unemployment number may be a little bit misguiding, notably because we covered this in several of the DGI programs that after post-COVID, many people did not return to workforce. So we have to look at the participation rate, but it's still at a healthy 4.3%. Now, this is another problem for United States. The average balance in a savings account or a retirement account in United States is abysmally poor. So the savings rate is one of the things that's helping India, probably because of the several national schemes like Provident Fund and
cultural heritage too. Heritage too.
Yeah. So it's about 32% of GDP, whereas United States is abysmal around the 18% of the GDP. That was last calculated in 2022. They haven't done the rework of this. And if they do, it probably may be even closer to 16% or less than 16%. So if you can, this is the first page of the data. So when you look at the data, you can see as to why India is accelerating when you look at several of the key KPIs relative to United States, and why United States is fighting. We'll come to one more data variable on the tariffs, as well as trying to bring manufacturing back home. As far as the 10-year bonds, which always reflect the state of the demand for the debt, India is around 7.2% because of the dollar rupee discounting. That's also still likely to come down to about 6%. United States is at 4%, and they are trying to get this to about 2% or even 2.5%. This is the cost of this is the yield generated by a 10-year bond. PMI, which measures the manufacturing index, which has to be around or greater than 50%, is a reflection that there is a positive expansion happening in the specific sectors, which is manufacturing and services. There is a very healthy, which means there's not only private capital formation, but there's also expansion of manufacturing and services. So India is following a very healthy number here, 58 and 62, 61%. And US is almost there on the manufacturing and services. That is within the terrain of what they are doing, though the headline number is only 18%. Within the terrain, they are still at a very healthy percentage. Really, they have to kind of get this manufacturing stuff as a contributing GDP number at a much higher, and curtail their imports. So when you come to imports and exports, which define your trade deficit, you can see that India's exports is 825 billion, and then imports is around 915. This is the last year number, okay, and the deficit was around the $95 billion mark, 94 billion. But what's happening is there has been a 4%, 4 to 5% growth, which is what Mr. Piyush Goyal has been saying, notwithstanding the tariffs, that exports are growing as well as imports are growing. Okay, so the trade deficit is likely to widen. The question is, this is all pre this 50% tariff, which came into effect end of August. So we need to see what happens. But already there are signs, because of the tariffs, the US exports to US are coming down. Remember, India enjoys $100 billion exports to US market, and how that will play out remains to be seen post the negotiations. We have touched the US, and this is another kind of derailer from a US point of view. We have covered through separate programs. The US exports is only $2 trillion, and the US imports is $3.2 trillion. The $1.2 trillion, vast majority of it is sitting across three countries. We again covered that, which is Canada, China, and Mexico. So they have to not only switch the imbalance in the GDP contributing sectors, they have to increase the savings rate, and then you have the switching from the services to manufacturing to give some balance impetus to the economy, and then bring the deficit down from this $1.2 trillion to some manageable kind of a number, 500 billion or so, or 600 billion. So United States has never believed in foreign reserves because it is the reserve currency. India maintains $700 billion or $695 billion, and United States is about 255. The budget deficit, both of them, India has a 4.8, and they're trying to bring it to 4%, which is the imbalance between expense to receipts. So they need to kind of shorten the deficit. Otherwise, it will continue to add towards your debt. We'll come to the debt in a minute. As far as United States is concerned, they have jumped from 400 to $500 billion in the 2016-2017 time period to about $1.8 trillion thanks to COVID, thanks to generous spending both by Trump in his last year as well as by Mr. Biden over his 4 years. And we have today $7 trillion of expenses and $5.2 trillion of income. In the reduction, thus far, reduction in the deficit has also been enabled by tariffs. The tariffs we'll cover that in a separate kind of in a minute. About $100 billion or $150 billion has been adjusted towards this imbalance that has to some extent brought it below $1.8 trillion to about $1.78 trillion, which is 6% of GDP. When I used to be doing some work with Treasury, we were keeping the budget deficit and managing it around 2 to 4% during the Manushan years. Okay, so this is a big number, 6% of GDP, but still it's within the realms of economic KPI. Next page. Okay, so I think just let's go back to one more. Let's go back to the previous slide. So did I miss the debt? I missed the debt somewhere. Previous page.
No, it's in the
Previous
next
slide.
page, sir. It's in the next page.
1 minute. Sorry. No, no, no. Previous. Government debt. Yeah,
Right
yeah,
here,
yeah,
right?
yeah.
Yeah.
Yeah, government debt. So you take a look at the government debt. Okay, 3.8 trillion is the debt of India. That's about 80% of GDP. On an amortized basis, at 37 trillion is not 120%. There's still less than 100%. Some of the debt is amortized and rolled, but there are signs that this is going to be 120, 125. And there's a specific set of programs that the US government and private enterprise is working on to address this specific issue. So these are kind of the comparative headline, which gives you why India is throttling along and why US is trying to reset and try to claim some territory back to refix its economic equilibrium. So there is definitely a method, especially on how to get United States back from the deep hole it is in. But we'll give you two headline slides in a minute. So the next slide. Okay. So is US in deep hole and are there early headwinds? Yes. We have seen last week, you saw that European Union said that there is credit defaults, and as a result, there is some stress in the system. And we also have Jamie Dimon saying that he has already seen 3 bankruptcies and some challenges around defaults. Is also seeing slowdown in the some of the manufacturing and economic activity, primarily as a result of uncertainty around the tariffs. So we have early headwinds that there could be some trouble brewing, but the story is that people are watching it. This is what prompted gold to go from 3,900, 4,000 to now today about $4,250. You saw the gold bounce. Some people attribute it not only to the economic headwinds, but also attribute it to the sudden upsurge in the demand, which also added to the import bill of India, because Indians are big consumers of gold, and this is festive season. So some of these things pointed out to the demand in gold, and gold is now zooming on its way towards the 5,000 mark with the geopolitical risk as well as the economic headwinds and people fearing, hey, will there be a discounting of the dollar? Okay, so that's the reason. There's also geopolitics. And if you are the latest news coming out is Israel has launched an air raid in Gaza because some of the militants have not laid down and started attacking the soldiers, Israeli IDF, within the Gaza territory, which they're entitled to hold on to. So let us see how long that peace kind of holds. And we also have had some issues from the Iranians. So both this stuff creating some headwinds. There's also now growing but much louder rumors that whether Xi Jinping is in control of power or whether there is something looming in the horizon
A
there.
massive purges yesterday eve, sir. But
Yep.
15, 17 generals. Oh my goodness. I lost count, sir. I knew some of the names. Said, what? What the hell are these guys up to? So there's massive churn going on. So let's continue on this one, sir.
Right. So that's on. We have given you the data that it is in a deep hole. It is going to spend in the next 10 years from 25 to 35 on a $7 trillion expense, growing at about 4%. Close to about $80 trillion is going to be spent by the US government. So they really need to think about how they're going to take $7 trillion or $8 trillion out of this and put that money back into paying off the debt to the extent that they can bring the deficit down. This is one of the programs that we are looking at. The other thing that is also being looked at is how to reduce, how to converge on this gap between receipts. Receipts is 5.2 trillion and expenses is 7 trillion. That's the 1.8 trillion dollars. And the big driver there is the interest costs. And to see whether the reduction in the interest rate costs, reduction in the interest rates will help to downsize that specific number as well. Next slide. Okay, this is the current trend. By current trend, that by 2035, the debt will be 118% of 118% of the GDP. 2035, we are looking at close to $40 trillion economy growing from about $30 trillion. It's not a good number. And by 2050, 141%. There's a video that has been released by Warren Buffett. I think it's an 18 minutes video. I would encourage those who are interested in economics to, and he is outlining as to why this debt is, and spending money more than what you can afford is not a good thing for the US, and advocating what needs to be done. So therefore, this specific program, stabilizing the US debt to 100%, is about reducing the debt by about $7.8 trillion. We believe that that can happen through frugal cutting of the budget, plus also finding other means by which this number can be reduced. And this can have a positive and accelerating effect on a trend basis to 60% of the debt going to 60% of GDP by 2050, rather than 141% of the GDP. So we are now giving you the numbers rather than doomsday. Everything is going to be de-dollarized. US economy is going to collapse tomorrow, etc., etc. So there are programs, there are people, behind in terms of working. So this is the contrarian to fixing of the economy and getting it back as far as the US is concerned. When you look at the Indian numbers, the programs that, what's driving the programs for India? Obviously, reforms have been taking place. The latest was the GST reform, the digitization of the economy, which is bringing the cost down. The demand in the rural sector, which had plagued for a long time. The PLI programs, which nobody is talking about. If you go back and look at some of the statements by the former RBI governor, Dr. Raghuram Rajan, that the PLI programs were not successful, but it's exactly the opposite. The PLI programs has tilted the manufacturing. A number of major items are now manufactured in India, such as mobile devices, cars, heavy items, consumer electronics, pharmaceutical, chemicals, and APIs for the pharmaceutical industry. So there's lots of manufacturing has been brought home. This is besides the defense. This is the reason why India is a galloping economy, and there is a fairly uneven balance between exports and imports and consumer spending, because the consumer spending, most notably in the rural sector, is one of the key drivers, because most of the over 50% of the participants are in the rural sector from an economic participation is concerned. And so therefore, if the demand goes there, then it's obviously that lifts the economy. So it seems like many of the programs that Modi government has implemented, everybody likes it. To the extent that Tony Abbott, the former Prime Minister of Australia, Rishi Sunak, the former Prime Minister of UK, have all stated that in 10, 20 years' time, the guy who would be leading the world in terms of the positive is going to be the Indian Prime Minister. These things have come out in the past 24 to 48 hours in terms of the headline news. Yes.
Next one, please. Sure.
Yes. This is the numbers in terms of, you can
see. We can skip to questions now, sir, because there are a fair amount of questions now. Basically, you've made the point. United States has its work cut out. It needs to bring its debt down to a manageable level, and for that, it has a lot of tools at disposal. And viewers, you need to look at some of the monologues that I'm going to be putting out about why the rich and famous in the United Kingdom are fleeing and it's not a matter of speculation. It's just a matter of time before UK is going to start putting capital controls. I'll explain all that stuff. Do watch that one. Also, what is happening to the gold exchanges? Who is controlling the price of the gold? That's also coming. These are all important topics because Dhanteras just went yesterday or today, and I mean to some, and so this is very important to all of us. So don't just, yeah, it doesn't really matter. Yeah, it does matter to you. You know that at $2,200 price that gold is per ounce, it's getting really difficult even to buy a small teardrop of gold now. Sir, let's go to questions now, if you don't mind.
Thank you. Sure.
Akhila, thank you so much for becoming YouTube member. Jayaraman, thank you so much. Happy Diwali and nice to see you. Thank you. Take care. Yeah, I am taking care. I'll become better as the days, and with all your support and enthusiasm and your, buying all the items that we are selling at PGurus. Yes, we are getting stronger by the day. Next one, please. Brownie Batman wants to know, sir, why aren't people talking about the No Kings protest? Everyone are conveniently ignoring despite such massive protest. Sridharji, I can talk about this if you would like to touch upon it, sir.
Very simple. It's a massive protest, there's no doubt, but it's very obvious and very clearly stated that this is funded by Soros Group. Okay, it's not like people turning up voluntarily. It is funded by Soros. And look at the cities where this has happened. This is not a national movement, right? So this is a movement that was specifically targeted, focused around cities where money plays a significant part. Which are the cities? New York, Chicago, DC, Los Angeles.
Oakland?
Yes, these are the cities. So that's my 2 cents. They have been under fire. Army is going in many of these cities to quell these types of, which often turn into violence. Many of them have a lot of illegals, and so there's not much to talk about, because all these things, including Antifa type of protests, we have seen during the years of Biden and post-COVID.
And viewers, think about the title, No Kings. What exactly is that, No Kings? Viewers, what this is a play by deep state to tell Trump that we can come and poke you in the eye where you think you are in control. And the No Kings is the name that was given when the United States itself was rising up in protest against the British rule. No, what is it? No something, no taxation without representation. Patrick Henry's famous statements in the 17th, 18th century. So they used to take aim at, I think it was Edward or something like that, George the Third or something. I'm forgetting the name, but the No Kings comes from there. So they are trying to take that timeline and trying to apply it to Trump and say that Trump is the latest king and that there should be no Trump. So this is a last croak of a dying frog. And I'll tell you again many things by way of monologue. While I was recovering, doing a lot of research on looking at information. I have some very revealing data for you. UK will be the first domino to fall, my prediction, and it will be followed by France. And once these two, then there is not much. There is going to be a huge reset in Europe. Just watch what happens as the Europeans themselves will start driving out the illegals. Just watch. Okay, next question. Ganesh wants to know views on gold, silver, crude oil prices for the next 6-12 months. So this is for you, Sridharji.
Crude oil prices continuing to slide. There is plenty of supply. There's no OPEC cuts. You already may have seen the Brent and the normal West Texas Intermediary. He's on a band of $58 to $62. So you will see that the next six months, 12 months is hard to predict because of the geopolitics. But in the next 6 months, we'll continue to see the crude around the $60 and the benefits passed on. I think we have already seen a close to $3 cut passed on as far as United States is concerned. Gold is definitely galloping towards $5,000, accelerated by geopolitical stress and fears around some of the smaller economies unable to bear the tariff situation. As far as the gold and silver, it probably will go tango here because they are the safe metals right now amongst the commodities. Usually you go to oil. Oil is usually you go to usually you also look at oil. Oil prices are falling, so nobody is buying more US dollars and keeping it, and everybody is moving towards gold, including the central banks, and that's what is causing the gold price to kind of go up. We will continue to see this situation until there is geopolitical stability, number one, until we are already seeing some headwinds in China, and also the resolution of the tariff issues, plus some of the Middle Eastern tensions, that it doesn't get out of control.
Next one, please. Maithili wants to know, though inflation has come down, why there is no reduction in repo rate in India?
Well, I think that they've come down to about 6.17%. That is a far cry from 7.5% that India was about 1 year ago, 7.49%, if I correct. So yes, India will not dramatically reduce the rates because they do not want to have abnormal credit expansion. So they will gradually kind of bring the rates down. Yep.
Also, retirement, sir. People who are on retirement income, their returns will go down. Your fixed deposit returns will start going down, viewers. So you don't want to let it to go down too much too. There's lots of constraints for India. I'm very happy the way the tightrope walk is being done by the Modi government. Next one, sir. Arun wants to know, Sriji, wishing you a very happy Deepavali, and thank you, and same to you, Arun. The tariffs is causing quite a bit of pinch in our pockets, with Indian imported groceries having increased between 20 to 50%. We can survive, but for how long? Sir, just give us a little bit of an insight. We know a few things are happening. The 25% tax on India for buying oil from crude, I think that's going to come off very soon, isn't it?
It is. And I think this question, Sriji, before we get to this question, is what they're saying is that the tariff is causing, which means any item that comes in is levied at 25%, but that is getting passed on, most notably in the Indian groceries segment, and they are witnessing price increases. It's very interesting that you saw the inflation number. The consumer confidence in the US market, that survey has also come out. The consumer confidence is basically because those costs have been absorbed in the traditional consumer produce segments, which is not Indian groceries. Much of it has been absorbed by the retailers. They have not yet passed on those high costs as yet to the retailers. That's number one. Number two, you've also seen reduction in the oil prices and gas consumption. There are three main areas of expense. One is gas, second is food, and the third is finance, which is namely, people take money through credit cards and so on to fund whatever their expenses are. You do see the food expenses remain more or less on par rather than reduction, notwithstanding the fact these tariffs have not had impact on the price of foods. As far as the fuel, there has been a good reduction as a result. It's not $74 we are talking about. We are talking about $60. That's a significant kind of a number reduction. As far as the Indian thing is concerned, that's always the case, folks. I mean, you know that if you have lived in the United States for long, you do feel the pulse almost in real time on a day-to-day basis when you go to an Indian grocery store.
Yes, indeed. Next question, please. Pawan Kishore wants to know, are Chinese men controlling hedge funds that control US stock market? Why do stocks always fall with tariff war on China?
They fall basically because you can see immediate implications China is the manufacturing hub for United States, retail, consumer electronics, then construction industry. All these are reliant, automobile industry. There's a significant amount of imports flowing from China, and there's a significant of raw materials, including the rare earths. So therefore, any tariff issues, and we have already given you an answer that in United States is 80.1% is a services economy, only 18% a manufacturing economy. So there's a significant amount of risks as a result of this tariff war, which could create impairment to the US economy. So that is the reason why whenever there is any kind of an imbalance with China, United States coughs.
Thank you so much, Anil Kumar Sharma, for becoming a YouTube member. And that brings us to a close of today's program. Sridharji will be back again. If something breaking happens in the middle of the week, Sridharji will give us an update, most likely on a Wednesday. And stay safe, everyone. Please enjoy your Diwali. And Sridharji, as always, a pleasure to have you on our channel, sir. Thank you so much for doing the solo show last week. And hopefully it won't happen again. Namaskar.
Namaskar. Thank you so much, Ji, and good luck to you for all those programs that you're lining up for your monologues, Sriji.